Hyde in London, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, bold words from Bezos in his last shareholder letter as CEO when he looks to his legacy and has some recommendations for how to treat the hundreds of thousands of company employees. We'll have the details. Plus, a digital health certificate, or in other words, a vaccination passport. Some travel industries and sport venues, they want to require it, but others, including states like Texas and Florida, have banned it. We'll talk privacy and equity issues, as well as the technology, with a key player in the app space. And crypto validation. One day after Coinbase's big debut, we'll hear from a member of the newly formed Crypto Council of Innovation, Paradigm COO Gus Colbella, on what he thinks about cryptocurrency going forward, including thorny legal and policy questions. Those stories in a moment. But first, US stocks jumped record highs once again amid signs of an accelerating economic recovery. Bloomberg's Kriti Gupta and Ed Ludlow, they're looking through all the data. Kriti, take it away.
Well, Caroline, green on the screen. That was the story today. Tech really outperforming. And you can see it on the chart behind me. The NASDAQ 100 actually ending at record highs once again. And a big part of that was Apple's gains. You actually saw them win a patent suit. So actually helping those major contributors. You know Apple is that big heavyweight for the benchmarks. But with those NASDAQ 100 gains, you also saw gains in that semiconductor index. The SOX index up a whopping 1.8%. And of course, this comes right on the heels of TSMC and some of those other semiconductor earnings, really saying that that chip shortage that's been driving those gains, those can actually continue into 2022. And that news is what boosted the SOX index for the first session in 5. And AMD, of course, was the major contributor. But we all want to know about the other major story, and that's Coinbase. If you flip up the boards, I want to show you what Coinbase did on its second day. And you can see it's a little bit of a pullback. A lot of this is pretty traditional, though. In a direct listing, which is what Coinbase was, not an IPO, it's pretty traditional to see kind of a little bit of a pullback in that second day, not necessarily indicative of its longer term performance. That's kind of a judgment that we usually use for IPOs or other types of new listings. Direct listings, not so much. That's something we can kind of bypass today, but crypto is still extremely important. So I want to show you that crypto actually did fairly well. You saw Bitcoin actually up, crossing 63,000. Ethereum, however, pulling back on the day. And of course, those crypto stocks that traditionally rally with Bitcoin, taking a step back. And some of that might just be that defensive trade you saw in the market. It could also simply be that Coinbase is taking a little bit of their thunder, Caroline.
We want to thank you, all things Kriti. But Ed, you take us away now.
Yeah, I wanted to dig into that Apple call because the stock is at its highest in around 2 months. This comes from a note from UBS with my favorite word. This is my word of the year so far, stickiness. They're saying that around 80% of iPhone users have upgraded from an older model, but there's more room, right? So many of us have obsolete older models of the iPhone. We now have the 5G generation. They expect that to continue and see good services penetration too. So some upside for the stock. And that, because of its size, really being a points driver on the NASDAQ 100 on Thursday. Also Amazon. I know you're going to talk a lot about Amazon in the show, but Jeff Bezos out with his last annual shareholder letter as CEO and really talking about workers. It's been such a big story for the company about the way workers are treated, the unionization effort. Interesting to see the stock higher. And finally, Microsoft trading at a 52-week high, up 1.5%. Chips, another big story, like Kriti said, but I want to look at some of the specific names if we flip up the boards, because TSMC is where it's all at, Taiwan Semiconductor. This is the world's biggest manufacturer of actual chips. It actually makes them. And even though it's traded in Taiwan, we also have the US ADRs down 2%, a pretty significant drop. Actually, only one of 2 stocks down on the SOX on Thursday. And what they're saying is that they expect this shortage of semiconductors to continue maybe into 2022, although they also upgraded their sales forecast and their spending plan. So kind of a mixed message for investors and digesting that. Elsewhere, lots of strength in the sector. Nvidia upgraded at Raymond James, up 5% on the back of that call. And what was so interesting is that Raymond James at the same time downgraded Intel. And of course, what's happened in the last few days, Nvidia has muscled into the CPU space, central processing unit space that Intel has dominated for ages. We love tension in the story. You can see the SOX higher, up 1.8%. Flip up the boards for a final time because I just want to get some context in my final 10 seconds. Semiconductor index up reasonably year to date so far, but you can see that Taiwan Semiconductor has really lagged that broader index of semiconductors. And what's the biggest laggard in the index, Caroline? Qualcomm, negative for so far year to date. Got to dig into that and sometime soon.
I'm sure you will. Ed Ludlow on the money. We thank you so much. Meanwhile, well, let's talk about the world's richest person. saying that his company must treat workers better. Amazon CEO Jeff Bezos says it's clear that the company needs a better vision for how to create value for employees. Now, last week it was announced, of course, that Amazon employees at a warehouse in Alabama overwhelmingly rejected an attempt to unionize. Now, Bloomberg Technology senior executive editor Brad Stone joins me now. Wrote the book, of course, The Everything Store, knows Jeff Bezos and is thinking well. This feels, may I be a cynic about it, a legacy play going on here. He's always been consumer first, but now he's employee as well.
That's right. It is one way to look at it, Caroline. I mean, this is his 23rd shareholder letter. In some ways, I think it's really the most remarkable. You know, you look at everything that's happened recently, and a kind of narrative has begun to coalesce among critics of Amazon. You know, certainly in some corners of the media, that this company is extractive, right? That it takes more than it gives, that it's a poor employer. And this shareholder letter is kind of a remarkable repudiation of that. I mean, Bezos actually goes through the calculation and says they've created $300 billion in value when you look at time saved and shareholder wealth created and employee wealth created. But then you're right, he very specifically goes and says there's room for improvement, and then says one of the goals is to be the planet's best employer and safest employer. But he does that in the framework of also being a little bit defensive about how he feels they do treat employees well.
I always think it's funny that he says Earth's safest place because of his busy building rockets to get to other places than Earth as well, Brad. But it's your take on how well they do treat employees, and your take on, because it seems as though actually people who work there recommend other people should work there, right?
That's right. Yeah, Jeff wrote that in his letter, that 94% of employees would recommend Amazon as a place to work. You know, he says he wants to get it to 100%. You know, the question that you're asking is a big, sprawling, messy question, right? How well do they really treat employees?
Sorry.
You know, no, it's a good one though. They employ over 1 million people. There's lots of pockets of different experience. There's certainly room for improvement. You know, one way, you know, that I'll just identify is like its fleet of drivers who they don't even employ. Those are contract workers. And as we saw, you know, recently, you're out on the road delivering packages for any company all day. And it can be brutal, particularly in times of COVID, to just, you know, find a place to go to the bathroom. You know, but you look at the vote last week in Bessemer where, you know, 2-to-1 employees rejected the union, only half even voted. And you do think like, you know, that maybe the dissatisfaction, at least in the fulfillment centers, is maybe a little overstated. It's not to say that they can't get better. It's brutal, tough work. You know, Jeff does talk in the shareholder letter about repetitive stress injury and how they need to do a better job of kind of rotating workers around. But, you know, in this letter, he's kind of laying out a defense, and you can almost feel the injured pride. You know, he really doesn't like the narrative that has coalesced around Amazon.
Less than a minute left, but your perspective on what Andy Jassy's going to have to do and how much Jeff is going to force these sorts of changes through.
Right. Well, look, I mean, the founder at any company wears a magic halo, right? They're revered by employees and investors, and the magic of that halo is they can kind of come in and push anything. They can get employees to scramble with the kind of fear to get anything done. Now, Jassy, like a Tim Cook, kind of worked with the founder, so some of that magic rubs off. But Andy Jassy's telling you to hurry up and do something by tomorrow. It means less than when Jeff Bezos is telling you to do something. So Andy's challenge is going to be to keep this company motivated and moving as quickly and effectively as Jeff did. Jeff says he's not going anywhere. He wants to remain an inventor, and that's also a big question. To what extent is the famous micromanager really stepping aside? And we don't know that yet.
And Brad, when's the new book go on pre-sale?
Yeah, thanks, Caroline. May 11th, Amazon Unbound.
Go get it, people. Bloomberg's Brad Stone, we thank you. Now, several counties, let's talk about employees a bit more, and around Silicon Valley, including San Francisco, opened up COVID-19 vaccine eligibility to people over 16. Now, anyone in California who can find an appointment will be able to get a dose. So what does it mean for big tech employees? Are they going to be going back to the office anytime soon? Joining us is Bloomberg's Priya Anand. And plenty of talk coming from big tech that actually this is a wholesale change. You don't need, we can all be flexible now. Certain companies don't even have an HQ anymore. But your perspective on whether people will go back to the office anytime soon, Priya?
You know, the reality is the tech industry was the first to very loudly embrace remote work, and there's clearly a lot of enthusiasm to very quickly get back to the office now that vaccinations are rolling out at a wider scale to much of the workforce now. there is this enthusiasm around, we want to get back. They're not going to necessarily force people. Many of the companies say they're not going to necessarily force people to go in every single day, but they do want people to actually be back there.
I mean, I've been back in our studio in one way, shape or form since May, and I'm that sort of person who needs to be in an office. I love being in an office. I thrive off the other people. I can completely understand why people want that sort of balance of 3 to 2, perhaps. What will, therefore, the reopening look like? Will offices in and of themselves have to change? Will there be more perspex and the like?
Salesforce is a good example. Salesforce said this week that they'll be reopening Salesforce Tower in May, starting with about a pretty low capacity, just a small percentage of the workforce. And I went by yesterday to see what the tower looks like. You can see inside the lobby, it's all clear glass outside, and you can see that they have, the rope that snakes around the airport TSA line. They have that rope for when you enter. And there are big stickers on the floor that say in all caps, maintain physical distance 6 feet. So, you'll be snaking through these lines like you're at the airport with these stickers reminding everyone to stay a distance. There's some signage saying, hey, make sure you're wearing a face covering, no guests at this time allowed. And there were these 2 big boxes that appeared to be air purifier types of things around the line as well to increase ventilation. So, getting back to the office, I'm sure there are plenty of people like me who are really excited to be around other humans again and not be, in like turtles in our shell for any longer now. I haven't even been in the Bloomberg office ever. I started in the pandemic, so I'm excited to meet you and everyone else. But, getting back is not going to be totally normal.
Certainly won't be. Priya, it's amazing the changes they made here, but it certainly does make you feel safe. We look forward to you coming to the studio and office sometime soon too. Priya Anand of Bloomberg, great reporting, really gives you the visual there. Meanwhile, coming up, the fate of Donald Trump's future on Facebook. It's up to the social media platform's de facto Supreme Court of content. Now, what the decision could mean for other social networks too. This is Bloomberg. Now, it's Facebook's so-called Supreme Court, and it's on the verge of ruling whether Donald Trump will be allowed back on the platform. Now, the social network suspended the former president January 6th, forbidding him from sharing content with his 35 million followers after the storming, of course, of the U.S. Capitol. Let's bring in now Bloomberg's Naomi Nix for more. And, of course, this being the oversight board is what we call the de facto Supreme Court. What exactly are they doing? What are they assessing? What kind of opinion are we expecting to be released?
So there's 2 questions before the board right now. The first one is, should the board essentially overrule Facebook's decision to suspend Trump's account and make the ban permanent? And then the second sort of question that they're mulling is sort of a larger question about how Facebook should handle political leaders who, post content that violates its rules, and how should they handle, potentially suspending those political leaders. And so we should expect from the board both a sort of cut and dry answer about whether Trump should be restored to the network, and then a larger commentary on how Facebook should be handling political leaders.
Yeah, because this has global ramifications. Talk to us just about Trump right here, right now, the arguments for, the arguments against allowing him back on the platform.
Right. So there are really 2 camps on this. This camp says, political speech is really important, and we as a democratic society should be protecting that political speech. And so we shouldn't really be trying to, take down the voice of political leaders on social media companies. But then you hear from others, critics of Facebook, who say, no, you're allowing political leaders to post dangerous and misinformed commentary that has real world consequences, and they should be treated like any other user. And so that free speech argument and the argument against it will be central to what the Oversight Board considers.
And Naomi, it was only on Monday, I think, that Facebook, Instagram, they were sort of announcing that there is new sort of extended ability for the users of those platforms to go ahead and, well, question the oversight board, sort of have it, you disagree with what they leave up and have it reassessed perhaps if indeed content has been. What do you think the ripple effects are of that and indeed the wider ramifications of what the oversight board is currently looking at?
Yeah, that's really going to expand the oversight board's scope. So previously, users could request that the oversight board review decisions in which Facebook decided to take down content, and now users are going to get to contest content that Facebook decides to leave up. And so, in response, the oversight board plans to double from about 20 to 40 people to expand, to address an increased caseload. But this really has large-ranging consequences for content decisions made in all sorts of, international contexts. Yeah. We might expect other world leaders to potentially get targeted by this decision.
Certainly when we look across the world, sadly, at the moment. Naomi Nix, we thank you so much, and we'll see what the ramifications are thereof of that decision coming up. Meanwhile, tech companies and some states plough ahead with plans to create so-called vaccine passports. But with so many players and with so much debate around privacy and equity issues, will it truly be enough to prop up industries and services devastated by the pandemic? We'll talk to a key player in the digital health certification space, Paul Meyer, co-founder and chief executive officer of the Commons Project. That's next. This is Bloomberg. Now, just taking a look at some of the US players in the airline industry over the last 2 years, American, Delta, Southwest, JetBlue, you can see stocks all on the upward trajectory since being dealt, of course, that heavy blow by COVID-19 pandemic back in March 2020. Now, increased vaccinations in the US, part of that upward picture. Some airlines, in fact, want travelers to provide, though, proof of vaccinations for service via apps that act as some sort of digital health certificate. Some sports venues, college campuses, they're echoing the same desire. So they're known as vaccination passports, and hundreds of groups are now creating apps. One such group is the non-profit public trust called Commons Project. Its Common Pass app creates a travel certificate from an individual's COVID-19 test result, runs it against entry restrictions of a destination country, and the Commons Project co-founder and chief executive officer, Paul Meyer, joins us now. So talk us through the pass and what feeds into it to make it easy if you're about to go traveling to get through customs, basically.
Well, it starts with where you either got tested or vaccinated, right? People have been talking a lot about vaccination passports, but if you look right now, most of the rules that restrict travel are actually testing requirements. So, for example, the U.S. has a requirement that people be tested 3 days before traveling inbound to the U.S. Many other countries have rules about testing before travel. So it begins by allowing people to actually connect Common Pass to a lab or the place they got vaccinated and upload their test results or vaccination records. Common Pass then basically kind of inspects those records, compares it against the rule to where you're going, and then basically says, red light, green light, either you've satisfied the rule or you don't.
You've worked, of course, alongside the World Economic Forum. You've got plenty of countries involved, partners involved, travel partners, technology partners, testing partners. Do you think there will be a one be-all and end-all app when it comes to a so-called, passport for these vaccinations or not?
No, and I think people are thinking way too much about apps. Ultimately, this is actually about trust. If you think about the problem, put yourself in the shoes of a government, right? You want to open up, you want commerce to resume, you want travel to resume, but your first duty is to protect the health of your population. And so you can come to the conclusion based on epidemiological trends that, okay, maybe it's safe if people who want to come to our country have either been tested or vaccinated. The challenge is, if you actually don't know that they've gotten tested or vaccinated, it's very hard to put that policy in place. I mean, you've seen all the reports of fake COVID test certificates, fake vaccination certificates, and without trust, and frankly, just because you got an app that says, COVID test doesn't actually mean it is trustworthy. So really, we think is the most important thing, and we launched the Common Trust Network in partnership with the World Economic Forum, which is really a global network of health organizations, testing providers, vaccination providers, public health registries that are committed to actually giving people their health information in a secure way that they can use to be able to show their status when they get on a plane across the border. But it's got to start from the source. And if you don't start with a network of trusted health organizations, the apps with data from unknown sources are not much more reliable than easily faked pieces of paper.
Of course, Paul, you're someone who has thought a lot about political ramifications in one way or another. You've worked as a speechwriter in the White House, but you've also worked for the United Nations, humanitarian agencies. You're someone who's going to be thinking about the ethics involved in all of this. How hard is it to be building this when you know that so many people are going to be basically left behind because they're not vaccinated and therefore unable to travel?
Well, this is why we think it's about both testing and vaccination, right? And again, the rules that are mostly in place right now are testing requirements. I think, generally speaking, there's a reasonable expectation that if you are going to let people come to your country, that you want to ensure that you're protecting your own population's health. And again, may not require vaccination, but if not a vaccination, a test result. And again, this is not something new. For decades, there have been provisions for needing to show, for example, yellow fever vaccinations to fly and travel to certain countries. I mean, in most schools in the U.S. require kids to show their proofs of vaccination to register for school in September. Yes. So this is not a new concept, but we do think that as vaccines are still rolling out, that if there's an alternative to get tested if you haven't been vaccinated, that helps address a lot of the concern that people have raised.
About a minute left, Paul, but it's interesting, in the UK, they are already sort of ironing out what a vaccine passport might look to go to a pub or a football match or whatever it might be, and it is that you've had a test or indeed you've had the vaccine or you have some sort of proof of the fact that you're not going to be spreading it. How do you think, what countries are doing it best?
Well, I looked, some countries are taking a very centralized approach. I mean, Israel was the first one that really rolled out their kind of green pass and have deployed that. They've obviously been, vaccinated a pretty significant being a part of their population. The U.S. has a very fragmented healthcare system, but one of the things that's really exciting about the initiative, the Vaccine Credential Initiative that we've helped co-lead, so many of the key stakeholders in the U.S., from the big technology companies to people like Walmart, are all converging around this idea of embracing this open standard, so this kind of solution can be deployed in a way that is reliable but also protects people's privacy.
Paul Meyer, great to have some time with you. We thank you of the Commons Project. Coming up, well, we're digging more into Coinbase as it continues its second day of trade, what the volatility and the debut means. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in London this evening, filling in for Emily Chang. And let's get an update on the latest tech news. Here's Bloomberg's Ed Ludlow in San Francisco. All the moves, please, Ed.
Well, I wanted to start in India because the venture capital activity that's happening in that country is incredible. The latest being that, according to sources, SoftBank has invested $450 million in Bangalore food delivery startup Swiggy, which is amazing because in India it's such a crowded field. But it's even more extraordinary if you flip up the boards and look at the details. This was at a $5.5 billion valuation, but it came less than a week after Swiggy raised $800 million US dollars from a pretty stellar list of private market investors. And in the same week, where India crowned 4 new unicorns. And, it's not a country we talk about often, right, Caroline? It's incredible, the capital that is going into that country at a time where the economy is still ravaged by COVID-19. So I just wanted to spotlight that because it's something that I think we should be looking at further. Flip up the boards again because we need to keep talking about crypto and we need to keep talking about mainstream investors piling in. Brevin Howard, a well-known hedge fund internationally, according to sources, is going to invest 1.5% of its main fund into cryptocurrencies. They're betting that the value of those digital assets will rise. It's a really interesting play, of course, on the back of a record year for its main fund last year, where it exceeded 27% returns. This is a theme we've been talking about all week. And to finish on that note, flip up the boards again, because Cathie Wood and ARK, we were just talking to Cathie Wood and ARK about volatility and cryptocurrencies. Well, her 3 main ETFs have bought around $246 million worth of Coinbase stock, which is, a pretty interesting bet to make. We often associate Cathie Wood's research with Tesla. Now we're talking about Cathie Wood and ARK's research when it comes to digital assets, cryptocurrencies, and the equities that are associated with them. Got some pretty good guests lined up to talk about with things like that, Caroline.
Certainly do. Ed Ludlow, great setup. We thank you. And yeah, Kathy, been loving all things Bitcoin for a little while. Let's talk about another person who's been loving crypto for a little while. Following the volatile debut, well, Coinbase closed, of course, nearly at 323 Thursday, 1.7% lower than its closing price on Wednesday. But it still was a blockbuster direct listing, receiving some mixed reactions from policymakers and investors, including ARK Invest's Kathy Wood, who predicted the stocks would see, quote, tremendous volatility. Take a listen on what they had to say.
What people call cryptocurrencies, they're really vehicles for speculation. No one is using them for payments, for example, like the dollar. What they're using them for is to speculate. It's a little bit like gold.
Expect tremendous volatility in this. It's going to be unstable in terms of investors and analysts understanding what Coinbase actually is.
I believe that most of the people who are most deeply invested in this company and in this economy, in this new crypto economy, are really long-term thinkers about what's going to be possible. And I think this is going to be a really interesting one for decades to come.
This was clearly a very successful direct listing. A lot of investor enthusiasm. It was a watershed day for Coinbase and for crypto in general. So I think when you look at the price action, there really is just a tremendous amount of enthusiasm.
I mean, Coinbase had some of the biggest volume out there today in terms of action. So joining us to discuss, Gus Caldebello, of course, Chief Policy Officer at Paradigm. It's a crypto investment firm co-founded by Fred Ersham, who, of course, was the co-founder of Coinbase. And indeed, you're focused on investment, but you've got a long history in working for other companies, in particular, well, you're a top lawyer at the U.S. Department of Homeland Security, Chief Legal Officer over at Circle. So think about the legal ramifications of all of this. But first, with investment hat on, how important was Brevin Howard, for example, saying they're buying vis-a-vis a Coinbase listing to the overall ecosystem?
Well, Caroline, I think everything that's happened over the past week related to Coinbase and related to serious other players making announcements about ETFs or announcing their investments in crypto really points to the main issue here, which is crypto's at a mainstream inflection point. 5 years ago, there were forward-looking hobbyists in the area, and stories would come across the newspaper every once in a while. But today, crypto is in the newspaper every day. It's totally hit the public consciousness. Bitcoin at all-time highs, Coinbase obviously going public, Fidelity and Galaxy and other companies filing for ETF applications with the SEC. And this is resulting in a massive amount of, I think, well-deserved attention for the sector.
Grayscale, of course, announcing it's gone as far as to buy a small ETF owner and start to rename some ETFs as BTC, no less. So clearly lots of excitement there. Also, though, of course, Gus, you are part of the Crypto Council for Innovation, which is sort of Paradigm's convening key players within the space, Coinbase, one of them, Fidelity, another, to look at the future of individuals thinking about crypto, but also policy making here. And I'm interested in your perspective of what legal people, folks, policymakers are making of the crypto space. Are they coming?
Well, you know, the reason that we got together Paradigm with Fidelity Digital Assets, Square, and Coinbase to form the Crypto Council for Innovation is because there is so much focus on crypto right now, not just amongst the general public and the investing public, but amongst regulators. And our job is to sit down at the same table with regulators, not just in the United States, but across the world, to talk to them about what we believe the massive opportunities around crypto are. Its job creating ability, its ability to cause people to be more included in the financial system. Not everybody has a bank account, but almost everybody has a phone, as well as the enhancements of personal privacy and national security that cryptocurrency can bring. And I mean, the first thing that we did, Caroline, this week, our first release was a paper by the former director of the CIA, Mike Morell, on how crypto is actually a boon to governments when the regulatory environment allows them to be used within particular countries.
Now, for reasons of full disclosure, my husband's a senior manager at Coinbase. So at home, I drink a lot of the Kool-Aid in terms of hearing from him some of the positive reasons that you outline about crypto. What I'm hearing more and more is some of the concerns about, for example, the environmental knock-on effects. Is that something you're dealing with from a policy-making perspective? How much is that becoming a backlash to where crypto and crypto mining could go?
I'm really glad you raised that. I mean, I think crypto has misimpressions. And if we're not sitting down with the policymakers and people who are thinking about this and developing a shared set of facts, then policy is going to be made and decisions are going to be made in an incomplete way. So I certainly think that that a lot of crypto community members have addressed and will continue to address the energy usage stories, including one in the New York Times today, which was forcefully pushed back on by other members of the community. So we're all on the same page about that. It really underscores, Caroline, the reason that we need a global educational organization like Crypto Council for Innovation to get the thinkers outside of crypto to focus on these problems so we could all enjoy their benefits.
Yeah, so our audience is on the same page. What is the argument that you should switch to a more environmentally friendly energy systems?
Well, the arguments that you see are that crypto, especially Bitcoin and other proof of work chains, are high energy consumers. And that has been shown to not be the case. In fact, there are very credible arguments that that Bitcoin drives innovation in green energy because of the system finds inefficient uses of energy and uses them when they would be wasted and polluted if not used. So there's a body of work on this that's important to get out there. And what we see is a lot of folks who are pushing back on the Coinbase direct listing and on crypto, sort of reusing arguments that we have found to just not hold any water.
Go read more about it when it comes to, of course, what you're putting out with the Crypto Council for Innovation. We thank you, of course, Paradigm Chief Policy Officer Gus Caldabella, of course, with us. Thank you for your time and insights. Now, coming up, a venture capital firm is working to find, well, maybe the next Coinbase, maybe the next Robinhood, the next Deliveroo. It's Index Ventures partner. It's Nina Ashadjian joining us next to discuss the new $200 million seed fund and what kind of startup candidates they are looking for. This is Bloomberg. Seed funding, and it's actually not that new to Index Ventures. Of course, the Index Ventures VC firm has backed successful companies at very much the seed stage, like Robinhood, Deliveroo, Figma. Now, Index is on a journey to find its new stars, help them scale from early stages to debut on the public markets. The firm has launched a new $200 million seed fund called Index Origin. Partner Nina Ashadjian joins us now for more. Talk to us about the seed fund. What sets the companies that you pick for success?
Well, thank you, Caroline. And you're right. We have been doing seed investing for quite some time at Index. And Index Origin is really a way for us to meet the needs of new founders, which is they need a platform that really can scale with them from origin all the way through IPO. And so being able to do a $200 million seed fund fits very nicely with our $800 million venture fund and $1.2 billion growth fund in order to do this. And what really helps founders be successful today is actually having access to capital and a trusted partner that can really be with them from day one of the journey throughout all the ups and downs until the company grows and matures into an IPO company.
In the last 18 months or so, I think it's that Index Ventures itself has done about 40 seed investments. I'm looking at companies like Fast, Goody, Grid, Remote. These are companies that do wide and varied kind of things, some of them making payments easier, some of them making, well, maybe AI that much easier. I know that's a focus for you. Is there a consistent theme as to what you're looking for?
Well, that's the beauty of seed investing, because you can really be on the cutting edge of investing in things that aren't even sectors or themes yet. So across the US and Europe, we invest in a pretty broad range at seed. You mentioned some of them: artificial intelligence, open source, fintech, enterprise, and vertical SaaS. But we're really excited to back some new emerging technologies, for example, like robotics, at the seed stage, so we can learn about these new sectors even before they become something that's mainstream.
Interesting. How do you even go about sourcing at the moment? Is it word of mouth? Is it thing? How do you, as Nina Ashadian, go out and hear about the latest cutting edge?
Yeah, it's a combination of a couple of things. First and foremost, relationships still matter the most in venture capital. I would say a lot of the entrepreneurs that we meet are actually through introductions of other entrepreneurs that we've actually either worked with or met with in the past. Second of all, we really collaborate closely with seed funds, and actually with Index Origin, we're hoping to collaborate with the seed ecosystem. So we got a lot of intros through angels, solo GPs, and other seed funds. And then third, data science has played a great role in actually finding companies earlier. We track things like where executives are going, how much headcount has grown. And so the combination of these things help us find these entrepreneurs as early as seed.
It's interesting how much we sort of fast track the growth trajectory of these sorts of companies, and how much quicker through these route to exit at the moment, the SPAC environment in particular is sort of plucking out companies that perhaps wouldn't have thought they were going to exit anytime soon or go public, and suddenly there they are. You've got so much experience in taking companies public. You've got, of course, Robinhood is about to. We're speculating about Wise, which, of course, another very early check that you guys wrote at Index. And, of course, what you've learned through the experience of Deliveroo. How are you looking about exit strategies? I know it's so hard when they're such small seed companies, but what do you think about the life cycle now?
Right. Well, if you're a founder today, there's two things that are going on. Number one, there's more capital than ever before, which is great because you can raise, you can hire faster, you can go to market faster. But second, because there's more capital available and the barriers to entry of starting a company are lower, the competition is fierce. So in the past, let's say if you raised a seed round, you usually had about a year or maybe even 2 years to build your team, really perfect your product, invest in marketing, and gain some customers. But now you have a mere couple of months before you actually have to get out to market because you want to be ahead of your competitors. So this is really compressed timelines, and we see rounds happening within months of each other. And so all of this has really impacted the trajectory of these companies, including when they exit.
You're sat in San Francisco. I'm sat here in London. Index, of course, very much global in its nature. We were just hearing from our colleague Ed Ludlow about opportunities in India. I'm interested in what you think about where some of the best companies are growing. It pained me as someone who's been a follower of European technology for so long to see what happened to Deliveroo on its opening debut and coming to the market, and did that have a hit to European tech, do you think? Or do you think companies of excitement are growing everywhere right now?
Look, I think actually what has happened over the last year has leveled the playing field and democratized the ability to build a massive company from anywhere. And as you know, we've been bullish on Europe before really European VC was even on the map. And so we continue to be incredibly excited. It's just such a big market, and there's so many opportunities there. So for us, we're still extremely excited about opportunities that can come from outside of Silicon Valley and the US, and continue to invest and double down on entrepreneurs both in Europe and also globally.
And I know that you've done that in your past, investing in Armenian companies in particular, and they're like, really great to have some time with you. We hope you'll come back sometime soon. Index Ventures partner, Nina, of course, Ashadian. She has got a wealth of experience. Started out her life as a high-yield bond trader. Who would think it? Meanwhile, still ahead, Mercedes enters a new era with its flagship S-Class sedan going all-electric. We'll hear from Daimler CEO coming up right now. It's a new launch that aims to take on rival Tesla on luxury EV market. That's next. This is Bloomberg. Now, as we mentioned earlier, Taiwan Semiconductor Manufacturing warns that a global shortage of semiconductors may extend into 2022. Now, the world's largest contract chip maker has lifted this year's targets for spending and growth. TSMC said its automaker clients can expect chip shortages to begin easing next quarter. But overall, deficits will likely go on into the next year. And the company joins a growing number of industry giants who warned of, well, longer than anticipated deficits due to unprecedented demand for everything from cars to game consoles to mobile devices. Meanwhile, speaking of cars, Chinese automaker Geely, well, used its new electric car unit, Zeekr, to take on tech giants like Apple and Huawei, who also want to enter the EV market. Now, Geely president An Song-hui spoke earlier on Bloomberg about their EV debut.
Zeekr is exactly created for this. It was spun off from Geely in order to become a brand new company, no matter its brand, products, teams, organization, or its culture, which is no different from any other tech and internet companies.
Now, all of this as German Daimler also unveils its new EQS sedan, an all-electric vehicle for the classic Mercedes S-Class. Now, the launch aims to usher in a new era for Mercedes, transforming it from a name that's known for high-powered combustion engines to one that can rival maybe Tesla on the luxury EV front. Now, CEO Ola Källenius spoke to Bloomberg's Matt Miller earlier.
On the battery chemistry side is something that we have been doing research on for more than 15 years now. And the particular recipe for the EQS is something that we have developed with one of our supply partners, and it has very, very good energy density. But if you look at the car, this one bow shape, as our chief designer, Gordon Wagner, calls it, why is it like that? It's form follows function. It has the lowest drag coefficient of any series production car with 0.20. So this smooth shape helps, and many little details lead to great efficiency and then also gives you good range.
And still keeps the design language pretty clearly Mercedes. Let's get back to the chip shortage if we could. You say you're going to prioritize vehicles like this, and I assume the internal combustion S-Class as well. But how hard is it hitting you in terms of production lost in 2021?
Well, we had disruptions in the first quarter. We will continue to have some disruptions in Q2. We're now talking about what the recovery scenario could look like with our suppliers. In some cases, it's not 100% clear yet what the supply availability will be. So we're hoping that we will be able to make up for much of that loss in the second half of the year, but it's still kind of day-to-day management.
How important is it to keep your suppliers close to your production? I know a couple days ago there was a story about your crosstown competition in Zuffenhausen working with a battery producer in Stuttgart, for example. Are you trying to source technology, chips, battery cells close to where you put the cars together?
The auto industry is a huge network of supply relationships and technology relationships around the world. Our guiding principle is to go for the best. Where's the best technology, the best innovation? Where can we find also cost structures that meet our targets? So that worldwide network per se, that is not something that's going to disappear, nor do we want it to disappear. But as we scale some technologies, you mentioned, for instance, battery, we're going to need so many gigawatt hours on the way to 2030. So we're going to, for some of the components, as has been the case in the past as well, build up production in the most important and biggest regions where we have manufacturing.
Can you put a dollar figure on what kind of investment you're plowing into this new electric push?
Many, many billions. The 5-year plan that Daimler signed off on just before Christmas has an R&D and CapEx budget of over 70 billion. And needless to say, the lion's share of that is going into new technology.
Can I ask about prices as well? I saw a story on the Bloomberg a couple days ago about China reducing aluminum production, and I'm guessing a car like the one behind you is full of a ton of aluminum and carbon fiber in order to save weight. What do you see in terms of input prices?
With regard to commodities across the board, it goes up and down. In some cases, you also hedge, and in some cases, you fluctuate with the market. But in general, commodity markets in the long run tend to be efficient. So if you get into a situation where there's a crunch, higher demand, prices go up, and then new capacity comes online. So you can't plan a product life cycle of vehicles that maybe are in the market for 7 or more years just on a snapshot of what's going on right now. You got to manage that over the cycle.
The Daimler CEO there talking with our very own Matt Miller. Meanwhile, well, that does it for this edition of Bloomberg Technology. A programming note for you, though. Tomorrow, we'll hear from the VC giant, Reid Hoffman. His thoughts on whether Trump will be allowed back on social platforms, on Bitcoin, AI, big tech, antitrust, and well, so much more. That's tomorrow on Bloomberg Technology. Stick with us for it. This is Bloomberg.